Good morning, good afternoon, good evening, students and traders alike. This is EdFX Trader again for another trading video, another lesson. And what we're going to be focusing on today is understanding how the higher time frames control the direction and price movement of the lower time frames. Well, in particular, we're going to be looking at the monthly time frame and how to use a monthly time frame to get direction. One of the things that have helped my trading a great deal is that the higher time frames controls the price movement and direction of the lower time frames. So if the monthly time frame says that the market is going to go down, the daily time frame says that in your analysis it says that the market is going to go up. Yes, the market may go up temporarily, but eventually it will go down. And oftentimes when we trade, we must focus on the bigger picture. And that is what the monthly time frame gives us. The monthly time frame gives us the bigger picture. So that's what we're going to be focusing on today. We're going to look at a couple currency pairs. I'm going to looking at the monthly time frame specifically. So this is the New Zealand Canadian and this is the monthly time frame. Okay, now when we look at the monthly time frame on the New Zealand Canadian, we see that from 2009 this market has been going up, going up, going up. It has been making higher highs and higher lows, higher highs and higher lows. Right, when I draw my trend line here, I can see that the market has now gone into the sell zone. Okay, it's barely kind of entering into the sell zone, hasn't fully closed. This is still an open candle, so we can't officially say that it's in the sell zone as yet. We need the month to end to say that it is in the sell zone. Okay, now when you look at the monthly time frame, what you want to look for is the overall direction, right? We want to look at direction. Monthly time frame equals direction. That's what we're interested in. And also when you look at the monthly time frame, one of the things that you're going to realize is that most of your monthly time frames, they will be in a range, right? And that is because the two countries have made an agreement that they will do business, they will do trade within a certain price point, that they will not let it go below this point, or they will not let the rate goes above this point, and so they do business within that price range. So whenever the market goes down to a certain price range, it will go back up, and when it goes up to a certain price range, it will go back down. Okay, and so that is crucial. Now also another key thing that you develop over time is that it's spatial intelligence. One of the things trading requires is spatial intelligence, and what I mean by that is the ability to look at a chart and to see the overall price movement. And let me give you an example. I'm looking at this chart right now, and if you saw this pattern here, let's just put it about there, right? If you saw this pattern here, right, then what you would focus on as a trader, let's just put it there, was that back in this time, if you notice this pattern, right, whenever the market touches here, it goes up. Okay, whenever the market touches here, it goes up. Whenever the market comes nearest to or touches this trend line, it goes up. And whenever the market touches the the top of the trend line, it goes down. Now this is crucial. Had you picked up this pattern several years ago, all you would do is that when the market reaches up here, you would sell. When it reaches down here, you will buy. When it goes back up to the top, you will sell. When it comes down to the bottom, you will buy. And it goes back up, you'll sell. Comes back down, you'll buy. And that's all that you'll have needed to do over all these years concerning New Zealand Canadian, and that would have made you money just by figuring out the pattern. So one of the crucial things is to be able to figure out what the market is doing, and when you have less candles on the screen, which is what the monthly time frame gives you, you're able to better see the overall movement. Now for the last couple of years, I want to show you something. This has been ranging, and once you're able to pick up this pattern, your trading becomes much simpler. Let me just put this about here, right? If you can see this now, we focus really on what matters, and all that the market is doing here, right? Watch this, is that it goes up and comes down, goes up, comes down, goes up, comes down, goes up, comes down, goes up, and it is making its way down. Now, we have no choice based on the information that is presented to us to say that the New Zealand Canadian won't go down. Based on the information provided to us, we have to say that it is going to go down. That's what the market has been doing, right? So that's what we're going to expect the market to continue to do. Must it go down? No. You can decide to go further up before coming back down, or just go further up. The market will do what it wants to do, and it will always be right. What we have to figure out, right, is what the market is doing and trade in that direction, right? You know what the market is doing. When this pattern was just being developed, let's say that we go back here, right? Let's say that we were right here. The market went up, then it went down. Then you see that the market goes up back to the same point that it went to. The only thing you would have to decide here, if you're at this point trading, is to say, well, market goes up here, it comes down, it goes back up here. I'm going to believe that the market is going to go down, and that's exactly what the market did. It went down. Now it goes down back to the point that it went to twice before, right here and right here. You have no choice but to say, well, I'm going to believe that the market is going to go up, and that's exactly what it did. Eventually it went up, and it went up back to this point, and so you're going to have any choice but to say that the market is going to go down. So that brings us to this point where we are in 2008. What do we believe that the market is going to do? We're going to believe that it's going to do what it's already doing, and that is to go down. So our main focus with the New Zealand Canadian is to sell, is to short the market. Now we understand that the market moves in waves, so it won't just go down in a straight line, right? But because we understand that the monthly time frame is saying that the market is going to go down, then we're going to focus on selling, finding opportunities to sell. All right, we look at another time frame. Let's just clear this one. Let's try let's see, let's try the Aussie US. Let's try the Aussie US, and let's see what we can see what this market is doing. All right, so when we look at the Australian dollar versus the US dollar, I look at this, and again I see a pattern, the most recent pattern, and this pattern has been existing for quite a while, and we're going to continue to believe that it will exist. The market is operating in a channel, right? Now, as I said before, these things will take time to develop and for you to see. But if you look closely, you can see that the market is going up whenever it touches or comes near to or around this uptrend line, it goes up. And whenever it touches or comes nearest to this top line, it goes down. The market is in a channel. This is what we call a channel. It's really also just a range, but in a more diagonal way, right? So this is what we call a channel. And the market has been operating in this channel. Let us put my there. The market has been operating in this channel, let's say from 2006. Okay, so we're going to expect the channel to hold. Of course, it can break through, but we're going to expect it to hold. And this is how we're going to look at this. We see here again, similar thing. When the market touches the bottom of that line, it goes up. When it touches the top, it comes down. And then it goes up and it comes down. Then it goes up and it comes down. Then it goes up and it is right at the point where it has 1, 2, 3, 4 times before gone up. So what do we believe that the market is going to do? We believe that the market is going to go up. That's the pattern that we see here, right? So that is how we're going to trade, and we're touching the bottom trend line right now. We're at the bottom of the channel right this moment, and so this is a great opportunity to buy the Australian dollar versus the US dollar. Now, it doesn't matter what the other time frames are saying. Based on the monthly time frame, we're going to expect this market to go up, right? Because that is what the monthly time frame has been doing. So if you generally look at the daily time frame or the 1 hour time frame, and it is showing you that the market is going to go down, right, I would caution you, right, not to sell any further. Selling is over. It is time to look to buy this market, right? So all your focus should be, right, is on buying this market. We could actually stretch this out here, is to buy this market, and then the pattern, we would have seen that the pattern goes way back, right? So I'm going to be focusing on buying this. That is where it is going to be, right? And then we will look on how we will go about buying this in other videos, right? So that's it for today. Go to some monthly time frames on your own as practice and see if you can generally figure out what is happening, what is the overall direction based on the monthly time frame. Right, once you are able to figure that out, that will do a great deal for you and your trading. Right, so go and see if you can figure out what those monthly time frames are doing. Right, and once you think you have figured out a pattern that has held over several years, then go for it. All right, we'll have further talks. Have a good evening.